I think there's definitely an element of sort of game-changing policy about this from what we have seen from the Chinese authorities over the last 18 months or so. They're very well aware that consumer confidence is at record lows. The property market needs to be stabilized before consumers can feel confident again. And I think this concerted, targeted series of measures that we saw starting on the 24th of September have gone a long way to alleviating the market as well as consumer nerves that this is something that is more durable and sustainable in terms of policy follow through rather than sort of the drip feed one-off measures that we have seen until now, which have failed to provoke a meaningful response, which would be a reacceleration in growth momentum that China so desperately needs. So I think even their announcement today, based on the market's disappointment that the NDRC announcement yesterday did not bring about some big bazooka fiscal policy, is testament to the fact that they are listening, they are aware of what is needed, and that they are prepared to follow through with what was already announced.
And so, Swetha, how will that translate then into demand for European consumer goods, do you think?
So I don't think that it will be necessarily immediate that we see an uplift in the fortunes of many of these companies. And certainly, the Chinese consumer is evolving quite quickly. Preferences are shifting rapidly. That said, I think when you're in the middle of a cyclical downturn, there has been a temptation to superimpose a sort of a structural narrative, which simply isn't the case. We noted, for example, from our travel to a tier 2 city just 100 kilometers away from Shanghai, a city called Suzhou, which actually has recently been promoted to tier 1 status. There is a luxury mall with a queue outside the Hermes store. So this isn't the case that the consumer is universally sort of depressed and unwilling and unable to spend. But of course, household deposits are at record highs, savings rates are enormously high, and to unleash those would require a revival of animal spirits, which these announcements would go some way towards doing, and to restoring these companies' pathway to growth in coming years, if not necessarily immediately, although even there, the Golden Week data points perhaps weren't as bad as expected in terms of travel, in terms of Macau visitations. So it's possible that there's a very early tentative, positive surprise. But I think for something more lasting, we need to give this some time.
But I wonder, can you talk more about how those consumer preferences are changing on the ground in China? Because you've seen Kering changing the Gucci CEO, but will it actually matter if you've got Chinese consumers preferring now local brands?
So I think that local brand preference is quite well entrenched in categories such as sportswear, such as mass market cosmetics. In high-end luxury, there is really not anyone, doing this, a local brand doing this at scale. So the barriers to entry and the moat around these European brands still remains quite intact. Their desirability remains high among consumers. I mean, what's really emerging is this extreme polarization where Chinese consumers are looking for brands that are offering true value, which isn't the same thing as price. So higher priced brands perversely are doing quite well because they're seen as offering sort of lasting value, in some cases even a sort of a resale floor value, whereas brands that have either missed the mark in terms of creative design or have perhaps priced themselves too excessively and pushed out that aspirational consumer are really kind of reaping the consequences of that now.